Imagine you're drowning in credit card debt. Interest piling up, payments overdue. You'd probably panic. Now imagine a government with debt so large it would take thousands of years to pay back. No panic, no urgency, no plan to pay it off. That's not a bug. That's the system. Most of us grow up believing debt is bad. You borrow, you repay, you're done. Governments don't play that game. They never pay off their debt the way you do, and they don't even want to. Let's walk into a story that feels wrong at first. In 2024, the United States government owed more than $34 trillion. Japan owed more than twice its annual economy. Many countries in Europe owed more than their entire yearly output. If a person owed more than they earn in a year, they'd be considered reckless. For governments, it's normal. Why? Because government debt is not like your debt. Think about your debt first. You borrow from a bank, you promise to repay with interest. If you don't, you lose your house, your car, your credit score, your freedom. You are a finite person. Your time, income, and lifespan are limited. A government is not. It can exist for centuries. It can tax millions of people. It can create laws, and in many countries, it can create money. That last part changes everything. Let's go back in time for a moment. In the early days, kings borrowed gold and silver from merchants and bankers. If they couldn't repay, lenders stopped trusting them. Empires collapsed over debt. But then something revolutionary happened. Modern governments invented fiat money, money not backed by gold, money backed by trust, law, and the power to tax. Now, when a government wants money, it issues bonds. Here's the simple version. A bond is a promise. Give me $1,000 today, I'll give you $1,000 plus interest later. Banks buy them, pension funds buy them, foreign countries buy them, even regular people buy them. Government debt becomes a global savings account. And here's the twist. Governments rarely pay back the principal. They roll it over. Old bond matures, they issue a new bond, use the new money to pay the old one. It's like refinancing your mortgage forever, but on a planetary scale. You might think, isn't that a Ponzi scheme? It feels like one, but it's not, for one key reason. Governments don't have to die. You do. Your mortgage ends with you. A country can last 500 years. As long as the economy grows and people keep trusting the system, rolling debt forward works. But why not just pay it off and be debt-free? Because government debt is not just borrowing, it's a tool. Let's make it simple. Imagine a village of 100 people. They trade apples and bread. The government prints money to build a bridge. Workers get paid, they buy apples and bread. The farmers and bakers get richer. Debt injected money into the economy. Without it, the bridge wouldn't exist, people wouldn't get paid, the village would grow slower. Government debt is how modern economies grow fast. When a recession hits, governments borrow more. They send stimulus checks, they fund companies, they keep the system from freezing. If they tried to pay off all debt instead, they'd have to raise taxes massively or cut spending brutally. That means layoffs, crashes, social unrest. So debt becomes political survival. But there's a deeper reason. Debt is power. Who owns government debt owns influence. China owns U.S. treasuries. U.S. pension funds own government bonds. Banks are loaded with sovereign debt. Debt ties everyone into the system. If the government collapses, creditors collapse too, so everyone has an incentive to keep the game going. Now, let's talk about the most misunderstood part. Can governments just print money to pay debt? Short answer, yes. Long answer, that's dangerous. When a central bank prints money to buy government bonds, it's called monetizing the debt. This happened massively after 2008, and again in 2020, trillions of dollars appeared. The debt didn't vanish, it changed form. But more money chasing the same goods means higher prices, inflation. So governments balance on a tightrope. Borrow too little, economy stagnates. Borrow too much, inflation explodes. Lose trust, currency collapses. Trust is everything. When investors believe a government will manage debt responsibly, they lend cheaply. When they lose trust, interest rates spike. That's how debt crises happen. Greece in 2010, Argentina multiple times, emerging markets again and again.
Once interest rates explode, debt becomes unmanageable. Taxes rise, cuts follow, people protest, but powerful countries have a cheat code.
They borrow in their own currency. The US, UK, Japan, Canada, and others issue debt in money they control. They can always print more to pay it. It doesn't mean no consequences. It means no default, only inflation. Smaller countries that borrow in foreign currency don't have that luxury. They can't print dollars. They default. That's why US debt and Argentinian debt are not the same story. Now, here's the uncomfortable truth. Paying off all government debt would be catastrophic. Government bonds are the safest asset in the world. Banks hold them as reserves. Pensions depend on them. Insurance companies rely on them. Central banks use them as collateral. If governments suddenly paid everything off, trillions of dollars of safe assets would disappear. Financial plumbing would break. Markets would seize. Liquidity would vanish. Debt is not just accounting, it's infrastructure. And there's another layer. Debt forces governments to behave. If a government had zero debt and unlimited printing power, politicians could fund anything without constraint. Debt markets act as a leash. If investors think spending is reckless, interest rates rise. That pressures governments to slow down. Debt is a silent referee. But here's where things get tense. Global debt is growing faster than economies. In 1980, global debt was around 120% of global GDP. Today, it's over 300%. That means the world owes 3 times what it produces in a year. Is that sustainable? Maybe, maybe not. As long as interest rates are low and growth continues, the system can roll forward. But if growth slows and rates rise, the math changes fast. Imagine you owe $1 million at 1% interest. That's manageable. Now imagine it jumps to 7%. That's crushing. Governments face the same dynamic, but with trillions. That's why central banks obsess over rates. That's why markets panic over inflation. That's why political fights over budgets are so intense. Debt is not just accounting, it's geopolitics. Countries that issue reserve currencies can borrow cheaply. Others pay more. Debt becomes a tool of global power. The US can run massive deficits and still borrow cheaply because the dollar is dominant. If that ever changes, the rules change. Now let's zoom out. Why do you feel pressure to pay debt, but governments don't? Because your debt is terminal. Government debt is perpetual. You are optimizing for personal survival. Governments are optimizing for systemic stability. Your debt is a personal contract. Government debt is a global economic architecture. But this architecture has risks. Debt assumes future growth, future taxpayers, future productivity. If populations shrink, growth slows, or technology disrupts jobs faster than new ones appear, debt burdens get heavier. And political systems are short-term. Politicians borrow now, someone else pays later. Debt becomes a time machine, pulling spending from the future into the present. That can build infrastructure, education, and innovation, or it can fund short-term political wins. The line between investment and consumption is thin. So why don't governments pay off debt like you do? Because debt is not just a bill, it's money creation, it's economic stimulus, it's political strategy, it's global power infrastructure, it's financial plumbing, and paying it off would collapse parts of the system that depend on it. Here's the unsettling part. The system works until it doesn't. As long as people believe government bonds are safe, the machine runs. If that belief cracks, everything reprices instantly. Currencies, stocks, housing, pensions. Debt is built on trust and time. You live on a deadline. Governments live on a story that future growth will cover today's borrowing. The question is not whether governments can pay off their debt. They could, with massive taxes and spending cuts. The question is whether they ever should, and whether the story holds forever. Because if future growth falters and trust fades, rolling debt forward stops being boring accounting, it becomes a global reckoning.
So the next time you hear a politician talk about trillions in debt like it's nothing, remember, they're not playing your game. They're playing a game with no finish line, and the ending depends on something no one can control forever: trust.